Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap. Here we are, third down day in the indices, and I feel like this morning it was a bit surprising. Now, a few different reasons why. First of all, I feel like we got a little lull to sleep on Friday because our stock selection was that good. On Friday, Tesla made new highs in the year, Facebook screamed into the close, Netflix looked great, lots of things held in there pretty well, Google closed above 900. So if you're in the right stocks, all of a sudden you don't even see that the Dow was down 185 points after also pulling back on Thursday and doing some type of breakout failure. So the question was, what would pull what? Would the indices continue lower and then the high beta get whacked the way it did off the open? Or was it an emotional move on Friday for quad witching, for what went on with the Fed on Wednesday, which was definitely some kind of out-of-sequence broken scenario? And what wound up winning was the downside action, because high beta got hit pretty darn quick, and you either had to make some quick decisions on where you want to live, whether you wanted to have high-level stops, whether you wanted to salvage some of the trade and book some losses, or you wanted to hold your nose and say, I'm going to go underwater here because last time, or the last 3 times I got out, a few days later it's higher and I never got back in. So these are all your own decisions, your own choices. You have to use your own strategy in order to figure out what you can handle so you're not jumping out of your skin. So, you look here at the SPX, you will see that, all in all, not the biggest deal, right? This is the November low. Here is we tagged it about right by the 100-day in June. Here's where, we tagged it again and held. Then all of a sudden, the September trend, came into tact or went underway, so to speak, when it held here and reclaimed the 50-day and reclaimed the moving averages and broke this trend line. So all in all, this little 3-day controlled pullback, not the end of the world, especially if you had the right entries and you entered here or you covered your shorts here or you entered when we went sideways here. But if you were short here, okay, and you rolled it up or got short somewhere around here, you probably got squeezed through 1709, and now all of a sudden, like, holy cow, how did I roll up my shorts this entire way and not have any on? Same way, if you missed a lot of this move here, maybe you jumped in, and now you jumped in and you don't feel too comfortable because you're like, wow, I just paid up here, and here's where we are. So anyway, with that said, you got to take a closer look. Just to see on an active level what's taking place here is, the potential of a breakout failure. You saw it here on May 22nd when it pushed through and failed right around this area, and then there was some continuation when it broke, remember, below 1640. Then there was continuation again when it broke below the 50-day, and then it held the 100-day. Here, you had a small, different type of breakout failure when it broke above 1698, went a little bit, came right back below it, wasn't ready for prime time, and then, hovered there while there was some weakness in some sectors, and then you had your downside move. So here, this was your Fed day. This was the day that lots of players were thinking, oh, maybe we just, we taper, we hang around here, but what happened is zero taper, squeezed the shorts, got in some longs, and now, it's almost like it cleared the table. I was kidding around on Twitter, basically saying that, come back to me, that almost like a roulette wheel. For September, you had, 17 blacks in a row. So people kind of using the Fed day to say, okay, I'd like to have 1 or 2 reds come up, because I've been rolling it up so much and I want to, salvage a trade. You ever been in a casino when you see 15 reds up or 15 blacks up? The table is packed because people, start betting the other way at like number 10 or 11, and then they're running to the ATM machine and they're doubling down and this and that. But it feels like what happened on Fed day was, the roulette wheel went around. All the money was on red, thinking maybe we get a day or 2 red, and a double green came up. So it broke the entire pattern. So, longs, got a little hurt. The shorts got hurt. People who were short gold had it covered, and that failed. And people who were short the miners had it covered, and that failed. And everyone kind of got spun around because the Fed led everyone to believe something and did something else. But anyway, you go back to this chart, and you will see, so here was your inside day, which looked like normal digestion, right? This looked like normal digestion, and maybe you thought you'd flag to continue, but then boom. So this got a lot of people out of some of their active longs or even some of their swing longs. So then today, we went below, and what do? Okay, we held around the 8-day, still above the 21-day, still above this gap. So people are like, oh, when do I start to accumulate longs again? And, it's kind of like no man's land. Do you short on the third down day? Probably not. You cover some shorts, but do you buy excessively on the third down day? You dip your toe in, especially if you sold into strength, but, it doesn't mean that that's the ultimate, area, considering, look at the move, that we've had, for the majority of this year. And look where we are within this move in just September alone. So you could pull back a little bit more, and then the question is, can you hold it? So with that being said, the stocks that acted very well on Friday, even like Netflix. Netflix gapped up in the first, 2, 3, in the morning, up 6 because they won an Emmy. And, my rule is when I have overnights, when you watch on the VTF, I always sell or covered a third to half to book some of the, the money for the risk. And then, because you want to see what the composure is going to be, during the morning trade, because you never know. Sometimes there's follow through to be sold. Sometimes, it's emotional. But anyway, you look at Netflix and, it came in pretty darn hard, like this is your is the long-term trend broken? No. Okay. Is the last move, from this breakout or this breakout, done with? No. But you take a look at, this type of move. When was the last time in Netflix did you see, a really big potent wide range bar reversal like that? It's been a while. So you take a little notice. So when you're in a momentum name, you take notice of a candlestick like that just in case, because momentum could shift quick. So the bears want to stay in control. They don't let the bulls reclaim, at least half or maybe even a third of this. And then now if you were to break, this area, which we talked about, 298, there's a chance that, you see from here, maybe we see the 21-day, or maybe it sees lower. But overall, this is a pretty ugly candlestick. And, in the first 5 minutes, you could have seen it because look how it opened up and boom, this should not have happened. Okay, and you should not have opened up and filled the gap before you could have blinked. Look at this. Okay, it should have maybe opened up, went sideways, and then continued. This opened up, boom, and then didn't even pause. And then it broke below the support from Friday. So, I think most people on, the VTF, if you follow my strategy, you sell half, and then onto this, maybe get out of the rest. Instead of saying, oh my goodness, I'm going to keep buying it, and you could blow up that way. So anyway, with that said, it did hold that 298-ish area right there, but now it's on day to take notice watch, okay? Because again, these trends that are strong while they exist can change in high momentum names. Okay, with that said, I came in today and I got sideswiped with Google because Google acted really well on Friday. And then the news came out on Apple about the iPhone sales, and that gapped up. So I think that people do have some kind of arbitrage trade there where when Apple's strong, they short Google and Amazon. Who knows exactly what that whole high frequency mess is. But anyway, Google started to get a little hit pre-market. So I said to myself, same way I said to Apple when Apple was at 503.50, go, what's my trade here? I'm thinking about trading Google. If it could hold 900, trade through 904, 907, and become a nice momentum, trade, kind of like what happened with Priceline. It's been in a base of 5-6 months. Maybe that could happen. But with the market weakness and the way all of high beta kind of got hit, that trade changed. So I traded. I changed, so to speak. I said, I'm not going to hold through this, and I'll wait. Maybe I'll miss that trade if it happens and gets back its footing and goes back 904. Maybe I'll be able to enter it better, or maybe it won't happen. But with Google, my thought process was, here is your big base, okay, or your big channel, which has been in for a while, okay. Here's your descending channel there that broke above, which we've talked about. Here was this bull flag, right, nice little bull flag, broke above it, was holding right here. So for me, that has a hard time with Google sometimes, I said to myself, you know what, I'm going to stay in this trade as long as here, you go almost like this, this is how the trade looked on Friday, looking like, you had a nice engulfing day here, digesting higher. The Dow is down 187 points or so on Friday, didn't pull in. Wow, maybe it's ready to, to get the prime time and make new 2013 highs. Okay, so in my head, I said, as long as it stays above 895, I think in the morning, no, we put 894, which is what it should hold. I'm going to stay with it. This is what happened. Boom. Okay, held in there for a little while. You did have about 15 minutes to make a choice. Do you want to stop yourself out at 895, or do you want to hold through and now it's 9 points lower and you got to figure it out? Okay, it all depends on your process and what you could deal with. You look at the first 3 minutes of the day and you did have some time. Not a hell of a lot of time, but this is where it closed. it opened down, gave you almost a little bit of a gap fill. And on this I even said, you know what, if you were really jumping out of your seats at 895, maybe you sell a little bit here. And then this was your choice. You had about at 10:15, you had the same choice as everyone out there. Do I sell it? And granted, it could have went like this and then went higher and you could have been upset, or do I hold it? So right here was that stop, went below it, couldn't get back above it, and then trickled down the rest of the day, and now it's a different type of trade. So that's how, in a situation, if you're in it, you figure out what's your time frame and how do you want to handle it. Now, as far as Apple, will we get continuation tomorrow? Who knows? They came out with great numbers, and that's something Tim Cook usually doesn't do by saying what the sales are, pre-sales and earnings and this and that. Maybe he's being coached on how to add excitement to a stock. Who knows? It opened up, and if you chased it right off the open, you were definitely not happy. Here was the opening print on Apple, came right in. Okay, this was, if you were in it thinking, or you bought it, and this was the flag, and you had to get out of the way. Then from here, it sort of stabilized from pre-morning. I came back from mid-afternoon. I'm like, it's nice and tight right here. Let's maybe try a little bit. And it wound up, being a decent trade, not blockbuster, but goes to show you that unless you came in long Apple, it was hard to make money long Apple, which is just unfortunately the way it is. And it actually looked more like a short on Friday than a long, because if you look at how it closed, okay, this is how it closed. You had a 4-day move from just a support, closed with a big wide range golfing in candles, and then gapped up. So definitely some people probably got caught short. There really was no reason to be a buyer into this candle, so you couldn't be upset. So you had to work your way in. And I'm long small, not a lot. Now it's like people are saying this is an island bottom where it came down, so you got stopped out, came down, trapped some shorts, gapped above it, and now let's see if it could build a new pattern here, hold above this, and continue. Overall, the pattern, it's definitely complicated, and there's movement on lots of different time frames, but overall it feels like it's really trying to be a little different. Here was that gap up after earnings, which gave you the clean move. Then this was like that Google trade, okay? When I got here at 503.50, if you got out of here, okay, and you never got back down in here, you don't feel, you feel okay, but you didn't take advantage of the down move. But anyway, now it's, if you make this into a bigger range, it's holding in there, and this is your next little downtrend where if money wants to hide in there and wants to continue, if maybe they talk about an iPad announcement or invite or iWatch, perhaps it gets another move. So this is back on the B+ list versus when it came off the A list right there. So that's that. Anyway, what gave some people some clues that we're not going to be just off to the races was the financials. It was kind of skewed because I know myself and some of the people on the desk, we were trying to play Goldman for that trade into the close, for the buy and balance, and you had to really buy it and sell it on the close, and it was at the highs of 2013, and then today it opened down, and you couldn't get out if you held it overnight. And if you look at Goldman here, it's still not horrendous, but definitely what a tough trade. Okay, only below the 8-day, still above the 21-day, still above this gap from when it was announced that it was going to be in the Dow. This was an ugly day. You had to sell it on the damn close right there, but there it is right now. Overall, though, you look at the XLFs, and one thing to notice here, okay, which a lot of people were pointing out to me over the weekend, like, Red Dog, did you see that the XLF did not make a new high when you go back and you look at the spiders that did make a new high, but broke out and failed. So they diverged, and it's really hard sometimes to have the financials diverge from the S&P because that's a little bit of a divergence and a bearish symbol or signal. Sorry. So with that said, once you saw that and saw this turn lower, maybe it gave you some clues to also not be as enthusiastic as some into the highs. And now it's below the 821 day. It's right into this gap. But again, it's still above a lot of trend lines here. This is your new trend line because that's where it hugged. So we'll see. But overall, this small divergence, which technicians look for small divergences, gave you some clues to perhaps not have such risk on. Same when we talked about with the miners. Everyone was calling for a major new run in gold, a historic one. So I think I heard actually, get ready for your new historic run in gold. But look what happened here. The miners said no on Thursday. Look at this wide range bar. One of my rules is if it's going to be pent up, it's got to hold the top third, top half. Look what happened on Thursday. It said no. Then Friday it gave back the whole thing. And then today now, went below here. So that gave you some clues. Like, look at this bar compared to what was on, in the GLDs that day. So you saw this in the miners. That had to give you a little skepticism that gold was going to be able to continue, right? Because you had a doji, and this looked good if the miners didn't look so bad, but this gave you some clues that some weakness could come, and then look how it came. And now it's already given back almost 2/3 of this igniting bar. So I don't see a major new historic new gold run setting up. Okay, this has been a pretty big downtrend that's been very maneuverable in a lot of different ways. One, right here, when this major triangle, so to speak, broke to the downside, that was one signal, one to get out of the way. Another one, it broke the macro trend line here at 150, and now it's still below this little trend, okay, and still not really, giving you any commitment to any exciting moves. Yet we had one at the blood on the street lows, but that's when everyone capitulated out. Then you had a little add-on trade right here, but then this is where it ran out of gas. And one of the signs here is, I want to show you something else. Look, this was, what was that? That was August 28th, okay? That was a small little inside day on August 28th. Let's look at the miners. What did happen there on August 28th? On August 28th, that's, no, there it is. That's August 27th. So the miners actually had a really bad day, before the gold decided to head back lower. And then this was August 28th. This was your follow-through day. So you had a 2-day down move that engulfed this whole upper range, while gold was just sitting up there, not doing much. So that was some clues there, which again, if you use some of the miners' clues, you wouldn't have got caught here. So we'll see what happens overall. At this particular point, I'm avoiding it. Some people said they're getting short after 3 days down. Good luck. It looks like pistol to more short than a long, but we shall see. And we're coming to this spot here that's tough. 3 down days makes it better to cover than press shorts, but it doesn't necessarily mean that you go in with both fists and start buying everything. You did see a decent bounce back in Tesla and Facebook versus some other things. LinkedIn that's been somewhat beat up off the highs, but still strong trends came off the lows. So lots of little things to do, but in a time like this, I think it's just low gross, low net until we get a bit more clarity. You had a big move in September that was definitely not what people were expecting. And then last week you had another situation with the Fed that people weren't expecting, that cleared off people's slates, so to speak, whatever they were working on. And now I think the market's trying to figure out, is good news anymore? Because we were starting to think that good news was good news, right? We were getting used to rates going higher, banks are acting better, it was okay, economy getting better. Let's get off the Starbucks or whatever everyone calls it. And then by them saying they're not going to taper, now is bad news good news, or is bad news mean that the QE didn't work? So I think just most of Wall Street is a little confused. So when Wall Street's confused, or like at least I'm confused, I pull it back. Why put yourself in harm's way? Take a break. It's been a heck of a year. There's been a lot of tradable moves. I think a lot of guys have been rewarded, and now is the time to perhaps let the market come in, or wherever it's going to go, embrace it, so we could be in the right frame of mind for when we get that pivot low, when we see relative strength, so we could get a nice tradable move in the fourth quarter, because typically the fourth quarter, in my opinion, or historically for me, has been a really good quarter. So if it remains the same way, there's going to be a lot of opportunity. So don't get too frustrated, don't overtrade, and don't give money back that you don't need to. I will be hosting CNBC Asia tonight if you get the world market, so tune in with Shuri, Lisa, and Martin. Been doing it with them for almost 3 years now. So it's a good outlet to talk. It's a half hour long, or sometimes longer. So I get to say some of my thoughts there, but you're hearing them here, so it's all up to you. With all that said, it's only Monday. See you tomorrow. Have a good night.